Good morning and welcome to Trading Places Live on StockCharts TV. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host here at Trading Places for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. But before we look ahead, let's take a look at what happened yesterday. You can see here, this is a candle glance chart, taking a look at some of the major indices around the world. I do have these candle glance charts set to 4 months. So you can kind of get a little bit of short-term picture, but also a little bit of the intermediate-term picture. And as you look across most of the major indices, you see kind of some similarities. The highs that were set back in July on the Dow Jones, trying to test those here in September, although we have backed off from it the last couple, maybe 2-3 weeks. Same thing with the S&P 500. NASDAQ did not quite get to those July highs, but also consolidating back here just a bit. Russell 2000 taking it on the chin a little bit more. Going around the world, though, you can see a lot of the indices, German DAX, trying to make a breakout. This is the one index that I follow the most closely from around the world because the positive correlation between the German DAX and the S&P 500 is strongest. So I always like to keep an eye on what's going on there. The German DAX, although it does not show today's action, and the German DAX was pretty flat when I looked last. Right now, it is down 10 points today. So it is trading currently at 12,417, but still we are above the 20-day moving average, trying to take out this trend line here. We shall see. But overall, yesterday was a pretty positive day. You can see the Dow Jones was up 97 points, the S&P up 15, the NASDAQ up 60, Russell 2000 lagging a bit on a relative basis once again, only up just a little under 3 points on the day. Looking at the sectors from yesterday, here's a quick sector summary. You can see technology, healthcare, consumer discretionary, and materials leading. To the downside, energy. Crude oil prices got hit down about 3% yesterday, and as a result, energy stocks took a hit to the downside as well. The one nice thing about this sector summary is you can take a look at different time periods. And so over the course of the last month, as we've been seeing a lot of this consolidation, you can see that the strength has come from a lot of different areas. And we've got one aggressive area in the financials. We've got one defensive area in utilities. And then you've got energy and materials. So the market is just consolidating, waiting for some clues. Pulling all of these sectors up on candle glance, I think, again, you can kind of look on a relative basis and get an idea of what's been going on. Technology, really throughout the entire month of September, just flat. We did get up close to that July high, have not been able to break through. And really, as we look across here, the only one of the aggressive groups, and I have all the aggressive sectors listed on top here, the only one that made the breakout earlier in September was the industrial group. We've pulled back, holding that 20-day moving average, trying to move higher off of it. Financials also look very strong, nice little cup and handle back to the 20-day moving average. We shall see if we can get the breakout. It is a little disconcerting to see the defensive groups make breakouts here in the month of September. But I should also point out that September is the month when we do tend to see defensive groups outperform, August and September. Today, it's October 1st, a new month, a new quarter, and we shall see if we get a breakout, whether or not we can get the aggressive groups leading to the upside. That would be extremely bullish. All right, well, that is our first market recap here on Trading Places Live. I do want to give a shout out to my producer, Zach Dillon. He is in early. I hope he's got lots of coffee in him. Zach, how are you doing out in Seattle?
Doing awesome, Tom. I do have my coffee right next to me, and yeah, it's been helpful this morning.
Yeah, I have a feeling it's going to be very helpful for you for quite a while coming in here, helping me this early in the morning, but I really do appreciate it.
No worries.
What's that?
I said no worries, anytime.
Yeah, well, okay. Tuesdays and Thursdays, there's your anytime.
There it is.
All right, let's get things going here. We do have the agenda up on your screen. Relatively speaking, of course, if any of you that follow me know I do a lot of relative strength work. So when we get into relatively speaking, we are going to take a look at some different areas of the market in terms of relative strength. Earnings spotlight. I follow earnings reports very closely. Of course, we don't get into earnings season for another couple of weeks, but there are still earnings reports that have come out recently. There are some more coming out this week. So we'll take a look at some of those and see what all that looks like. A chart apart, that's a new segment. Just kind of want to take a look at different charts that maybe have some meaning, and maybe they just kind of stand apart from some of the others. Volume matters. I am a volume technician. I do think volume matters. Sometimes volume can be, the high frequency traders, but when you have low volume, there's no doubt that that can be very misleading. If you're getting a breakout and there's no volume, you're really not getting support for it. Kind of hard to mask that. So we'll be taking a look at some charts where volume matters. And then I'm going to end the show, and I'm going to try to end all my shows with 3 you must see. And these are going to be 3 charts that, for whatever reason, it could be a pattern, it could be maybe an industry group, it could be whatever, but these are 3 that you really need to take a look at before we get into the trading day. So I am going to jump into relatively speaking. The first chart that I want to get into, and I have a set way of looking at relative strength. You can see right here, relative strength industries. What I've done is I've created a chart list here at StockCharts where I list every one of the industry groups and compare them to the S&P 500. So this isn't just telling me which group is, on a point basis, which ones are going up and how much. It's just telling me on a relative basis which groups are leading each day. And so I want to start with that and walk you through some of the things I look at. So the Dow Jones U.S. Recreational Products Index, this top chart right here is a relative chart. It's price relative. So you take the Recreational Products Index, you divide it by the S&P 500, and then you just simply plot on here each day's result. And so you have a chart to tell you how this group is performing relative to the S&P 500. When I've got a group like this that is moving lower for weeks and months on end, and you can see that the relative price action stays below the 20-day moving average, which stays below the 50-day moving average, that's generally going to be a group you want to stay away from. If your goal is to outperform the benchmark S&P 500, why would you want to be looking in a group that is significantly outperforming the benchmark S&P 500? Makes no sense. But what I did notice yesterday is for the first time in over a year, recreational products relative to the S&P 500 moved above its 50-day moving average. You can see that 20-day is starting to turn up. Still haven't gotten the PPO, the relative PPO break above the zero line, and it's been a while. But this is at least a signal that maybe we should begin taking a look at some of the charts, some of the stocks maybe within this group. So I'm going to go ahead and pull up just a couple of them here. The first one, Thor Industries. This is a stock that reported its earnings here over the last couple of days. Actually, I think it was yesterday. And here's a relative chart that I like to follow. So here's Thor Industries price chart. It's absolute price chart. And then it's got recreational products here beneath it. It's got Thor relative to its recreational products peers. Then it's got Thor relative to the S&P 500. And then, of course, recreational products versus the S&P 500. Now, if you look at this, you can see we are making a relative breakout to about a 4 or 5 month high in the recreational products group. Thor Industries certainly been in a downtrend versus the S&P and its peers, but that could be changing here. This was a nice move. I do want to just show you one other chart here on a weekly basis. Thor on this downtrend, I'm not going to annotate it, but if you connect these highs coming across here all the way down, we've been in about a 20, 21 month downtrend. Looks to me like yesterday with big volume, we might be breaking it. I'd like to see this stock get up above $60. That was the recent high. That's right about where your 50-week moving average is. I think if we can clear and close above yesterday's high and these other highs, get through $60, I think Thor could be one to keep an eye on. Next up, we'll take a look at the computer hardware group. Let me go ahead and grab that. That was the second one on the list. So I'll just go up here and know where it is under the technology group and check out computer hardware. Computer hardware has been on a roll here to the upside. Really, really big move on a relative basis. I think the strength is pretty obvious. The relative PPO now above 2 and rising. That is generally going to be an area you do want to be invested in. And a stock that I'm going to pull up here is one of my favorites in the group, Apple. Probably have heard it before. I've been touting Apple for a while, and I really like the stock. I think if you look back over the last 2 months, you can see the volume has been picking up as it's been making a new high. The S&P hasn't broken out. So obviously Apple relative to the S&P, and I'll show you relative to its peers, has been very strong. So here's Apple moving higher on an absolute basis, clearing that late July high. That was earnings related. You can see that the relative or the absolute strength in computer hardware need to get through that 3,000 level, but just a few weeks ago we hit 3,000 or got close to it, and that was an 11-month high. So computer hardware is definitely on the move. Apple, relative to computer hardware, performing very well, and you can see across all of these, this is exactly what I like to see on my charts. Moving from left to right, every one of these price relative charts is moving up. And so based on that, I think Apple is going to be a very strong performer heading into earnings season, and I'll be very surprised if they don't blow away their estimates. All right, maybe do one more of these. Let's take a look at, I'm going to pull up the medical equipment group. Now, this wasn't on the top of the list. This was probably about the number 7 group, and this is in the healthcare area. So we pull up, now let me see if I can find, there we go, medical equipment. And medical equipment, when you look back, and I'm going to pull this up over the entire bull market, last 10 years. And you're going to see since about 2012, right here, this group has been on fire on a relative basis. So if you're looking to outperform the S&P 500 the last 7 or 8 years, you probably want to have a medical equipment company somewhere in your portfolio. We've had a couple of hits, as you can see, but for the most part, this group just continues to go higher. I think it looks really good. I'm going to pull up a few charts here on this. I had 2 in my blog earlier today. So let me go ahead and show you those. First, I'm going to take a look at AVDR. Now, this is not particularly liquid. You can see that yesterday it only traded 78,000 shares. Prior to the big move up here in August, some of these days the volume was pretty light. So I just want to throw that out there because I don't like to trade stocks that are illiquid. But AVDR still on its chart looks pretty good. Last week was rough. The stock took a big hit, but it did print a hammer yesterday on the 50-day moving average. I think that is noteworthy. A second stock in this group is Stryker, SYK, another one that I put in my blog today. Equal highs coming across, higher lows. I think this is in a very strong, bullish, ascending triangle pattern, waiting for a breakout. A break above about 223 would measure up into the low 240s. Measurement can be determined from the top of the pattern down to the first low in the ascending triangle. So we're talking about up 20 points or so, taking us up into the low 240s on a breakout. The final one I had, and another one I think looks very interesting, is Zyxi, Zynex, ZYXI. Try to remember that ticker symbol. You can go back off of these highs. Beautiful uptrend, great volume trends. Another one that can be a little light on volume, especially when things start to settle down. But this is a stock that's been under a major accumulation, straight up move. And if you connect these highs going across, they're declining. And if you connect the lows, they're increasing. And so what you have is a symmetrical triangle that is squeezing over here. I believe a breakout above 10.5 would be very bullish. Watch the volume to confirm. All right, I'm going to go ahead and move on now out of relatively speaking and into earnings spotlight. There are a couple of stocks that have reported recently that I wanted to just share with you. Let's talk first about AutoZone, AZO. And this probably reported last week. You can see a big move down here. We did come up in, probably 2 weeks ago, test that prior high, and then earnings came out. We could not get through with the earnings. So a lot of times I look for earnings to be that catalyst to get us to the next level. When you don't see that, then I start thinking consolidation. They did come out. They beat top line. They beat bottom line. I think that if they get back down into this level around 1050, they're getting closer and closer. That would be an area, maybe look for a reversing candle. If you get an intraday move down, say to 1025, come back up and close above 1050, I think AutoZone could be a nice trade. CTAS, really like this company. They're trying to get through overhead resistance. Here was the earnings report, just came out last week. They did easily beat on their top line, bottom line 232 versus 214. Easy beat, trying to get through 270. A close over 270 with the kind of volume we've been seeing would be very bullish here. What I am seeing is an uptrend, a cup, and a handle. Breakout above 270 would measure up another 25 points to 295. Finally, actually, I'll do 2 more. KMX, this is CarMax, another great report, got a big gap up. Easy beat on the top line. Bottom line, $1.40 versus $1.33. Pulls back, holds that 20-day moving average, and is now starting to turn back up again. We want to get that breakout above 92, 92.5. That would be your confirmation on CarMax. Last one I'm going to bring up is Nike. Nike had a beautiful breakout with its earnings. Easy beat top line, bottom line, 86 cents versus 71 cents. Look at the volume coming in. Sideways consolidation for a while and a gap up. This is what I was talking about in terms of a catalyst with earnings. Nike used earnings as a catalyst to make this breakout. It's continued moving higher. I think any kind of a pullback in the future down to around $90 would be great entry into Nike. There are a couple of earnings coming up, so I thought maybe I would take a look at a couple of these. One is going to be Costco. These are companies that will be reporting later this week. Costco made the breakout to new highs late in August and into early September. It has pulled back, holding close to support. What I like about it, even though it's pulled back relative to its peers of late, it did just set a new 52-week high, relative high to its peers 2 weeks ago. I think this pullback is probably going to be an opportunity, although I don't like to buy and just hold into earnings and hope. I do think looking at this chart, though, Costco comes through with some nice earnings. We shall see. One other stock that I wanted to mention here, it is a home builder, Lennar. A lot of great reports coming out of the home building group. This has been one of the strongest areas of the market. You can see Lennar has not been one of the best stocks in the home building group. Yes, the group is on fire. Relative to the S&P, it's doing great, but Lennar has not been one of the best. So I'm not overly optimistic. I think they'll have a good report just because of the market that they're in. But I would be a little careful if they disappoint at all. This is one I'd probably trade out of and look for another stock in home builders because there are plenty of them that look good. All right, that is it for our earnings spotlight. So we are going to move on to a chart apart. And what I want to look at today on a chart apart is just getting a feel for maybe some of the areas that are looking good, breaking out. One, I just mentioned, home builders, XHB. Look at the XHB yesterday, making a breakout to a new high. And this uptrend has been steady, higher high, higher low, higher high, higher low, all the way up the chart. I think this group continues to remain solid heading into the fourth quarter. I don't like to chase, but certainly anything on a 20-day test as we go forward would be very interesting there. Jabil Circuits. It used to be Jabil Circuits. Jabil Inc. Look at the volume coming in on this. This was an earnings report, big breakout. A lot of sideways consolidation here. Did get that breakout on earnings. I think this one continues to go higher. Although, again, I don't like to chase when it's this far above the 20. If all of a sudden this has a rough week, pulls back maybe 5-6%, that would probably be a great time to think about getting in. I mentioned the home builders. I mentioned stocks that maybe, or one stock, Lennar, that was not performing well on a relative basis. Here's one that is, KB Homes. KB Homes I featured in the Earnings Beats Digest newsletter. It's a free newsletter that I do 3 times a week, Monday, Wednesdays, and Fridays. I featured KB Homes before their earnings came out and talked about their relative strength. Look at the stock breaking out versus the group. So when we looked at Lennar, we saw a long-term downtrend. But when you look at KB Homes, look at the relative strength coming in and the volume. That is a really good combination because it's signaling that you are getting accumulation. And obviously, Wall Street is favoring KB Homes versus other stocks like Lennar. So I want to be in the leaders. Now, been straight up. Again, I want to get a pullback, but this is one that certainly would be on my radar. GPI. This is Group 1 Automotive. Not a whole lot of volume, 200, 300,000 shares normal, so keep that in mind. But I do like this uptrend. Nice cup. Look at this handle. And then on the breakout, volume was nice and strong. This actually measures from about 88 or 89 down to 72.5. I'm going to say 17 points, and I'm going to put a target on it of 105. GPI looking pretty good. Owens Corning. Big breakout here. Really looks good. Look at the volume coming in. Relative strength picking up just at about a maybe 7-8 month relative high versus its peers. I did want to look at this one on a weekly chart. You can see after moving lower throughout almost all of 2018, we did consolidate for a while, started this move up, had equal highs, higher lows, and we broke out, came back down, tested that 20-week moving average, and have broken out again. This is a stock, looks to me like it has reversed that downtrend and is beginning to trend higher. And again, this is where it's really important to keep an eye on the volume. When I get a breakout like this and I'm seeing bullish chart, and then I get heavy volume to boot, that just confirms to me that there's some accumulation taking place. So this is definitely a stock that I would keep an eye on. All right, let's take a look maybe at, I want to pull one up on the NASDAQ that yesterday I wrote about in my Earnings Beats Daily Market Report, and that is Seattle Genetics, SGEN. It's in the biotech space. There was news out about one of their drugs, and obviously market liked it. Big breakout here on the daily chart, but also if we take a look at the weekly chart going back the last 3 years, you can see this is a really important breakout on this stock. And yesterday, this is a weekly chart, so we only have 1 day's volume in here from yesterday, 3.8 million shares, but you can see already this is going to be a rather big volume breakout on SGEN. It is volatile. It is part of the biotech space, which has not been particularly strong. So when you take a look at the relative chart here, you're going to see that breakout. You're going to see that volume come in yesterday. But look at the biotechs. Biotechs have not been very good. Seattle Genetics, very strong relative to its peers, breaking out to a new 52-week high. And even being part of a poor biotech space, the stock is breaking to a new 52-week relative high to the S&P, which is great. This is where the relative problems begin. Biotechs relative to the S&P right now are near, very close to a 52-week low. It's going to be hard for many stocks to do well unless this group starts to turn higher. But it is always important to know who the leaders are. And I would say based on the volume trends that we are now beginning to see here on Seattle Genetics, this is one I'd keep an eye on. All right, let's move on to Volume Matters. We've been talking a lot about volume here with some of these 52-week highs. How about some stocks that met or exceeded their average volume yesterday by at least 2.5 times? So all of these stocks you're going to look at are going to be at least 2.5 times their normal volume. Now, FDP, this is Fresh Del Monte Produce, big move down. The stock down 9% yesterday, and you can see the volume nearly 2 million shares, certainly way above what was the average if we look back the last few months. They came out with a big push here to the upside. They were it was announced they were joining the small cap 600 index. So that was one of the reasons for the push to the upside. I think we're seeing some profit taking. My guess is we might get down here to this 20-day moving average. I would look for a pushback to the upside after that. AUO. This is in computer hardware. I've talked about how strong computer hardware has been. That doesn't mean every stock goes up. So rising tide doesn't always lift all boats, apparently. AUO has been moving lower. Look at the volume coming in. They recently announced that they are going to be delisted. That is not a good thing. So they are going to be moving, I believe, to the over-the-counter market off of the New York Stock Exchange, and that is not ever going to be viewed positively. A lot more manipulation on the OTC exchange, not nearly as many market makers, trading stocks, lower price stocks, and so forth. But look at the volume coming in here. This is clearly a sign where volume matters. Everyone's bailing on this stock. I would be personally on the sidelines, taking no chances here. Let's see. PGTI, another company, came out with some really strong results. And this is PGT Inc. This one I think really looks good. And if we can get a break above 18, that would be very, very bullish. Look at the stock making this push on heavier volume, pulling back, hitting the rising 20-day, and now starting to pick up again with heavy volume. If we stretch this out to a weekly chart, I think it's really important that you see this 18 level, because I think the downtrend's broken. I think we have a double bottom in play. And if we get a break above 18, I think an uptrend begins here. So PGTI looking very strong. GPRO, last one I'm going to give you, GoPro. For volume, last couple of days, look at the volume coming in on the gap ups here. So we had a downtrend clearly in play. Volume started coming in early September. We got the 50 period test. That's what I expect off a positive divergence. You had higher PPO, lower prices. So what I expect is a 50 period test and a PPO centerline test, which we got. From there, it could roll back over, or we could get the breakout. Instead of rolling over, we've gotten the breakout. We're holding that rising 20-day. I think GoPro is beginning to look pretty good here. So I would have to say this is one I would certainly keep on my radar, and a pullback is one to pay attention to. Maybe think about increasing your reward to risk on a trade. All right, I'm going to move into my final segment today, and this is going to be the top three, the three you must see. And I'm going to annotate these, and I'm just going to give you charts that just kind of popped out at me yesterday. I think as a trader, a fairly short-term trader, these are things that I would be taking note of. And so first up, I'm going to pull up a software stock that I think could have put in a bottom yesterday, a really strong one, Coupa Software. I know software stocks have been getting hit, but nice hammer being printed yesterday. I'm going to pull this up on a relative chart, and then I'm going to annotate here. And you can see coming across here, see these highs back in June, heavy volume. We topped out with that doji, came back up, topped out again, and then we broke out. And on the breakout, you can see pretty good volume on this move to the upside. We have been holding this level multiple times. And look, yesterday, we went down, put in a long tail below, came back up, printed a hammer, holding that support line. I don't know. I think Coupa Software looks pretty good. It is volatile. Keep your stops in play. But this is one, if software starts to run again toward earnings, I could see a nice move here heading into earnings on Coupa. So we will save that one. We can come back and take a look at that one maybe on Thursday and see what happened. All right, next up is OMER. This is Omeros Corp. Omeros, I think, also printing a nice hammer. And this one right on gap support, right there. So, again, this was a big gap up, came back down, tested it, put in a hammer. Let's see. This one I don't think is in a nice uptrend like Coupa was. But still, this is an area where I'd expect maybe a short-term reversal. Maybe go up and test those moving averages. We'll see. And then the final one I have is a chart that I just wanted to point out that with the dollar breaking out, I think we have to be really careful with gold. Gold, and I'll just draw the trend or the neckline in here. But basically, it's right in here, downtrending really from here down to here. Left shoulder, left side of the neckline, head, right side of the neckline, right shoulder, breakdown yesterday. This measures down still quite a bit more. I'm going to say we make a run back down toward 1425 on gold. And those are the top three you must see. I hope you have enjoyed this very first Trading Places Live. I want to thank you so much for joining me. Remember to tune in to Trading Places Live here on StockCharts TV every Tuesday and Thursday from 9 to 9:30 Eastern. I will also conduct a similar Trading Places webinar on Mondays and Wednesdays from 9 to 9:30 Eastern at earningsbeats.com. Be sure to check out my blog, Trading Places with Tom Bowley, each morning, as I'll provide a webinar link there to access the Monday and Wednesday shows. Also, be sure to check out Julius DeKempenar's new show, Sector Spotlight, which debuts 1 hour from now at 10:30 a.m. Eastern. Have a great day, everyone. I'll see you back here on StockCharts TV on Thursday morning. Happy trading.